Hello, everyone. Mike Arnold here, co-founder, Pad Trading Partners, along with Bob Iacino. How's everyone doing this morning? We had inflation numbers come out. We're going to let people filter in and jobless claims. Not much off of them. A little better, but mixed. Of course, CPI is still sticky. Good morning, Patrick. Good morning, Jacob. Good morning, Royal Palms. Good morning to the people. There's a bunch of people in the background. Come on in and say hi. All right. I'm going to announce this a couple times, but next week we'll try to keep the live streams going in the morning. That I've got some major conflicts. Monday next week is going to definitely be 30 minutes earlier, and then we'll have to figure out the rest of the week. So Monday, and it's going to be 30 minutes earlier and probably a bit shorter. So be prepared for that. I will announce it again a couple times. Good morning, Heinrich. Good morning, Christoph. So we had core inflation coming in slightly better, but that's a sticky one. Core inflation is year over year 4.7. That excludes food and energy. Month over month coming in at 0.2 as expected. The headline inflation number coming in at 3.2. Consensus was 3.3. Forecast 3.1. Previous was 3. So a little up from previous, a little down from consensus. Month over month coming in at 0.2. So we had initial jobless claims coming in a little higher than consensus, and continuing jobless claims coming in better. What else really matters? The rent component is coming down. So that component is coming down in inflation also. What else we have? We just have a bunch of Fed speak this afternoon. Bunch of Fed speak. So, and tomorrow we have PPI and consumer sentiment numbers. Good morning, Agostino. Is it Agostino? Did I say that right? When does the CPI revision come out? Well, the last month's, I mean, anything can be revised, but they don't normally talk much about the CPI revision. Are you talking about the revisions to the what am I looking for? GDP? Or is that what you're looking for? The GDP numbers? When do the next GDP numbers come out? I don't know. I'd have to look ahead. I do not know when, because those are the ones that are more significant because you have the initial, then a couple revisions in the final. Good morning, Sterling. All right, in case you're joining late, next Monday is definitely 30 minutes earlier on the live stream, and next week is sort of up in the air of the timing and if some live streams might not happen. So, but Monday will be shorter and 30 minutes earlier. So far, it looks like we're getting some buying pressure in the risk on assets and the mega caps. So we had the sell off and then some volatility after the European close. Watch for European close. There's been a lot of selling pressure going into the European close in the morning after the morning and going into the European close with some strength, albeit choppy strength, coming in yesterday afternoon. So on any selling pressure, I am very cognizant of reversals right after European close so far. Consumer cyclical, comm services, and technology leading stuff up. And technology has been severely beat up over the last week, so not surprising to see some kind of bounce in there. FedWatch tool still at 90% for a pause. Nothing's really changed there. And then the cut next March. Fear and greed still in the upper end of greed mode. All right. They'll revise it with the next. They'll revise it with the next release. Disney, the results were they lost a lot of subscribers, but then it bounced back on a price hike, which I don't know how that's going to help maintain more subscriptions. They better make their content better, and stuff with that. So that's Disney bounced back after initially gapping way down. Alibaba is up on a beat, but still in consolidation after the close today. Nothing really. And tomorrow, nothing. So, I mean, there are some, but nothing really market moving. Nothing really. So that's pretty much done for the week. So far, Again, we got some waning momentum. What's interesting is we've got daily cycles still moving up slowly, and it has not been able to make any headway. So, still watching. I've revised the trend line a little with a new defining point. Still watching this trend line, but on the open, more so keying off of if on any rally, 45.30 is my first level, then about 45.45, and then 45.56, and then 45.76. I want to check something out real quick here. Just wondering where. All right, that's not going to give us. I was just seeing where the harmonics, if there's any major cluster there. To the downside, reinforced this morning is 44.95. We break below 44.95. We're looking at about 44.71, then 44.58. So those, and then 44.39 are all these lower levels. But so far, it's losing momentum on the downside push. On the bigger picture, we still have a weekly cycle sort of flat and holding the weekly rotation zone. So any bounce, unless it can get above this 45.76 on a daily closing basis, I will really be focused next week on a rollover plays. NASDAQ, revise the trend line a little higher. Holding this longer term trend line you see here on the daily. You see here the initiating point back on March 13th. Defining point was coming in right around the 4th of May, and then it was tested here. It's harder to, it's a little lower here, but on the 4 hour, it's in the area with that 50. I'm still watching for the rollover play, taking that to the 50. There's the weekly, still holding the rotation zone with weekly cycles at the bottom. Daily cycles turning up, so we could see some upwards pressure. I'm also moving the harmonics to the full move down just to get a better perspective, because watching for the bounce in here. But 15.360 is first level. The next level, I'm moving a little lower to right around 15,500. 15,495 to 15,500 on a breakout. Then we got 15,605, 15,719. So, and this 15,500 is very key to get anything going in the NASDAQ, because that's now the breakdown zone, and it's already failed a couple times on trying to break through it. So that's very key if it starts getting above the short-term trend line in this 13,355. So what do you got here? Yeah, they're charging more for programming nobody wants. Exactly. Looking at the ES in 4 hours, very revealing. Have formed a nice downward sloping channel, and if you at 44.93 level recently and back end of June, mid-July, you'll see that level is key. Yeah, it is very key. It is very key. So you can see also you have this level. Here's what's, look at the end of June. That's why it's on the chart. It was major resistance, broke through, then broke through. This was a momentum bar, okay, in July that broke through that level. Then look, we've tested it on Friday with a little bounce. We dipped below it, but again, watch where things close on the higher time frames relative to it. Tuesday, we broke below it, then closed above it on the 4 hour. Sterling's really knowing how to read charts here. Wednesday, poke below it, close above, poke below it, close at, and then the quick, and then look at the retest this morning. Look at the retest this morning. Here you go on the CPI numbers, the little bounce back. So that is, if you want, because if we get a key close below that level with momentum, that is the level to watch right there if you want to mark a key line in the sand. So I'd set an alert anytime it breaks below it so you can start assessing what's going on. Thank you for posting that, Sterling. Thank you, Coco. NASDAQ has everybody is just too good. You don't need me anymore, so I don't even have to show up next week. Let's see. Let's check the targets. Let's check the targets. If I can choose the right thing. And right hand side, you said workspace is right hand low. All right, so which is the one I'd use anyways because the trend has been down, so we'd want to use the more conservative, and that does still work. Christoph is correct because the first and second targets are within the candle bodies. So those are targets you can use. Definitely stop raise 15,376, and then the first target area I'd use 15,410 to about 15,421. But thank you for putting that in there. I am no longer needed. I can take the rest of the year off. The Dow, again, this first target area has been holding, and now the Dow's been still the one that's relatively holding up the best since the pullback. It looks we've had that rotation into the Dow, but the levels had already tested that 50% harmonic this morning. So I'm still breakout about 35,461 and then 35,550, 555. If we close above that on the daily, then I will watch for the Dow to retest this high area setup from that set up the double top. On a key line of sand, on the open 35,270. Look at then I just like the harmonics. 35,170. And then the key target area, and you can go just a little lower from the Tuesday the 8th lows. Russell, it needs to break above 1964 before I get interested in any bullish move. To the downside, let me just flip this around real quick. And then, by the way, the Russell to the upside, 1974 and then 1985. To the downside, I'm lowering this level just a little. Let's get down that 4-hour time frame. About 1940. A little more conservative, you could go 1938, but you have the same buying pressure down here in the Russell. Then let's see if this is a valid double. Looks valid to me. So it would need a close. Now let's see how it is on the daily. It's right at that rotation zone. So this is a mixed probability one, but that's the only thing we need, at least a 4-hour close above this 1965 level. And then we could be seeing at least a short-term bounce move in the Russell. And according to Coco, it's going to go to which are we going to go to new highs in which one, Coco? ES, NASDAQ, or Dow, or all of them? And I don't, if you're telling me the Russell, you're a little off your rocker, by the way. But the other ones, I could see a new high in the Dow. VIX is back to that 15 level. If it starts breaking below that, I will shift more so to the bullish case in the short-term bounce, because then it would be back in the lower volatility region. The DAX still breakout levels still just above about 16,050. Key support 15.8. Other than that, it's no man's land for me. Nothing changed with the notes just yet. Nothing, unless you're looking at short-term patterns. 10-year, nothing changed here. 10-2s, just pulling back after rising up, hitting the second weekly target, but not much. Unless it breaks below this negative 79 basis points, not interested. Dollar coming down, not confirming or triggering the double bottom yet and bouncing, so that's still area. This is not enough of a bounce to invalidate it yet. So that's the only thing that shifts me short-term bearish on the dollar. And was not able to close above the 62.5 on the daily basis. So we'll keep an eye on the dollar, because so far it's basing with a sideways correction, albeit a volatile one. It'll be interesting to see those double triggers and it closes at that final target, because then we could see a retest of the most recent lows. But other than that, there's still some buying pressure coming in on the dollar. Crude, after breaking through yesterday, still key support now is 82.71. Next target is 86.02. Natty gas, slightly bigger pullback today, but after the big rally today, 280 is roughly the key support area with the rising daily rotation zone. Gold, trying to get a bounce on, but not much. Starting to keep an eye if we can get some kind of more significant bottoming pattern with cycles at the bottom, but gold's just not from a short-term perspective. From a long-term, we've talked about that. But from short-term, From silver, which had that double, silver from that double, we've almost completed the 87.5. Copper is still nothing. Japanese 10-year, still I'm watching to see if this breaks back below 50 or starts climbing back above 60. We climb above 60, I think we'll shift to more risk off again. We break back down, especially below about 55 basis points. It should fuel more of a risk on rally. And you know I hate those terms, but that's the way it's going to be. We do still have the mini potential double top, although if it keeps rallying, those both the little mini one will be out. The next target I'm watching for is 144.80 on the upside. Euro has confirmed the double, but not yet triggered. Not yet triggered. Right, did it a trigger on the 4-hour? Let me 110.42. 110.41.8. It did not trigger, so it's confirmed but did not trigger on the 4-hour. So that's what I would be watching for. It is not confirmed yet. Nothing yet in the pound. Bitcoin, still nothing. Back in the middle of the lower consolidation range. Who else do we have coming in here? All right, NASDAQ and ES for sure. Special appearances. When Sterling live stream. Hey, is there a video on how you draw your harmonics around double tops and bottoms? You can. I think I got some videos up on doubles. If somebody knows, could you put it in the chat? I'd have to look. You know, I've forgotten more. I have forgotten a lot of stuff, but I've generally forgotten the stuff that was not worth. That was, not worth remembering. I don't care about the Dow. It's a boomer index. Coco, what generate? Are you a millennial, Coco? I'm just wondering. By the way, I'm not a boomer, so. But so many people have gotten so good at this stuff. So many people. Now it's just translating it into and putting it into practice and learning how to manage targets and stops. Once you got the basics down, let's take a look. But this is, I like when I get, hey, people are pointing stuff out. Spiders. Any rollover play is going to be to the close yesterday for first 448.69 is where we're trading pre-market. First level I'd use is 446.70, and then the close from yesterday 445.75. On any rally, let's see, above, trading right at the 25% harmonic, so I just use this key area for any rally, 450.39 to 450.90. The minor breakout area is 450.90, 452.20, 454. Remember, you still have a gap behind, but my key rollover zone on a rally is between 452 and 454 before the gap fill, unless it closes on a daily above that 62.5. So also remember, if we do start breaking down below this downwards pressure, we have the harmonics now lining up with the 50, and we have a gap left behind. Technically, well, you're an old millennial, Jake. Is that how old can you be and still be a millennial? Huh? How old can you be? So, the Qs stopping at the minor harmonic yesterday. Still, there should be some downward pressure even on bounces here, but key levels 371.90 to 372. Also, it did close on the recent swing below the 62.5 yesterday. So I'm more aggressively on any bounces. I'll be watching more significantly for rollover plays in the NASDAQ, but it is trying to bounce a little up. Let's see. So above about 372, your key level is still 375.75. And then if I flip this around, we already know it closed below the 62.5. If we flip this around, where's the key rollover? 377.50 to about 380. Above, look at that is interesting because above that 380 you get, and then you have a gap fill left behind, but you need to get a close above that. So those are your upside targets. Tesla, we're seeing a little bounce, but still trying to hold this line in the sand. If that goes, watch out below because it's lost the 50 with yesterday's close. The rotation zone's rotating down, barely holding support. Not saying we can't get bounce plays, but I'm watching for rollovers after bounces. NVIDIA broke below the channel yesterday. So coming in with the 50 again, this is a significant shift. So and there are some pretty big order components coming in for NVIDIA, but it's starting to shift and roll over. Now we're still in a rough flagging pattern, but I'm on any bounce in NVIDIA, I'll be watching for another rollover play in that. That's where stuff is drastically shifting. You had Wells Fargo as a question. Wells, I just want to check out a couple things. So we, on this move down, it got above the 62.5, stalled out at the 87.5. So let's flip this around now because it completed that rule and then broke down from a double top pattern. All right, that is a key. That was not up enough to make it a triple top. Let's just put them on this side. And now it's completed the double top and the 50. So I again would, with the rollover, unless it can really start getting above 45.50, I'd be watching for rollover plays again. Could bounce up here. There's some gaps, but then key support is coming in right around this 42.75 to 42.95. You break below that, targets get relatively easier for me because 41.25, and then key line in the sand is 39.75. But this is banks are starting to weaken again. Also remember, if it loses this 42.75 area, it's back below the rotation zone. Look where that 50 is with the 200. So that 200, resistance, pop through, broke it down a bit, but that's an area coming back up. So that's going to be the overall price magnet I would be using on a breakdown, a continued breakdown in the short term. Even on a rollover, if there's another topping pattern or rollover, I would be targeting 41.25 as a key target area. There's lots of fractal indicators. You have to be more specific. I don't like to overcomplicate things. I've looked at a lot of indicators in my time, and that's why, again, the stuff I like, stochastic RSI, better than stochastics. I like the short-term RSI. The short-term RSI is fabulous, 5 period or less. 2, 3, 4, or 5 period or less for short-term overbought, oversold conditions. And I love anything related to the Bollinger Bands. Other than that, it's all harmonics and price action. So, XLP is a massive triangle that is consolidating on the weekly from the high in April. What do you see long term? XLP on the weekly. Let me pull this off. It's really an ascending triangle. I mean, if you want to get technical, what do I see? I'd still say there's potential upwards. There's some potential upwards price pressure. This is a horrible pattern to trade because if it does break below the ascending triangle, you have a lot of support. Now, the only thing, if it broke below about 71, it's all over. It's all over. You'll probably see a retest of the 66 area. But it is trying to still build a higher base, and we did get the close above the 62.5, but it stalled out at the 75. So on an upward move, I'd use the 77.50 as a target, and then if it can break from there, you have the 87.5 rule in play. Until then, if there was some kind of signal you had on the shorter term and you were trading this to the long side, my target for structuring the trade would be 77.50 area. And then I'd personally, and I don't have anything on in this, I'd personally then use that as a partial risk reduction position and then make the next target somewhere above 79.44 on a breakout above there. So for a breakdown play, I don't love it just yet. There's too much buying pressure in here. All right. Yeah, Roblox got crushed yesterday. And then I got to go into the opening again next week. Monday will be an earlier. Roblox, we should see some follow through even on the bounces to the downside. Next week, Monday starts 30 minutes earlier, and then we'll figure out the rest of the week from there. I shall talk to everyone later. Markets are open now. Let's just take a look. There's still selling pressure in the European session. So if we do break down, well, it could be more of an unbalanced day. So unless we really get a stronger weak tick, I'm leaning to the side of some choppier price action. Unless we really get market internals. That does not mean we can't get some quick little momentum reversals, but look, I mean, like, see these, yeah, we've had some wide ranges and some quick reversals. Just really pay attention to after the European close. All right? Right around and after European close. Because, look, that's when we've got some momentum to the upside, but it's not been able to sustain. And with that, I shall talk to everyone later. Bye for now.